G'day everyone, welcome back to Pete's Investing. Today is March 27, 2023. This is the S&P 500 market update. First of all, look, just zooming out, I know it's a bit busy here, but I'll just explain a bit more detail each of these timelines. We've got the daily, the 4-hourly and the hourly charts. You'll notice on the CCI 1500, the CCI 1500 is still below its moving average on the daily, which means overall it's still in a very bearish scenario. But on the 4-hourly and the hourly, it's broken to the upside above its moving average. So that may be a slight consolidation of price as we move forward. Let's drill down first of all on the daily and show you the bigger picture. So again, I've shown you back in September 21, for those new to the channel, it did give you an early sign to get out of the market. So you would have missed out on that little bit of a profit if you were trading based on the moving average on the price chart, on the moving average 200. But based on our CCI indicator, that gave you an early signal to get ready or get out of the trade if you're trading long in that period. And since then, we've been in a decline. Now, there's been obviously some minor pullbacks towards this descending line, and that's also shown with these little pullbacks on the CCI as well. And you could have traded the smaller time frames, but that would have been a bit riskier. So basically what I'm saying is at the moment you're still in a decline and still below its moving average on a daily, so be careful about going long. But you'll notice also, just pulling in forward, just notice there's I've got these one descending diagonal trend line and these two ascending diagonal trend lines, one in that range there, and the price is broken to the downside initially, but now it's sort of pulling back towards that first ascending trend line as well. Just be mindful of that. And we've got this little Fibonacci retracement, so it's actually broken up as far as the 78%, and now again potentially going to break that level again. So we may see, if it comes in within this range again, we may see further upside on the daily. On the 4-hourly, likewise, I know it's a bit busy, but again, similar sort of scenario. We've got to be careful. What I'd like to see it break initially above this first descending trend line, and then come and break this secondary line. But ultimately, I want to see a break above this resistance area to be more bullish about going long in the US market, S&P 500 at least if you're trading this. Otherwise, if we see a break to the downside in the coming days or even weeks, we want to see a break below this support line to be more bearish. And that will be shown more convincingly in the moving average of the CCI. That'll give us an early signal there as well. On the hourly chart, you'll notice again, looking at the short picture there, the smaller time frame, it's in that range, and I've got this Fibonacci retracement there, and it's broken up past the 61.8%, which is a key indicator of more bullishness potentially, and we may see it come and rest against this descending trend line in the short term. So again, if we see a break above that level there, then we want to see a break higher against this higher descending trend line to be more bullish. Then ultimately again that a break above that resistance area. So in the short term, I'd be very cautious about going long. If you're going to be trading long on the hourly or even the 15-minute time frames, I suggest you trade in the direction of the 4-hourly, i.e. if the 4-hourly is breaking to the upside on the CCI and so is the hourly, then I'd take those long positions. Otherwise, be careful of this 4-hourly time frame breaking to the downside. Do not take long positions because you really be trading against the trend. So just be mindful of that. To understand how to properly trade using the average down approach, we don't use stop losses. Reference the links in the description below. Subscribe and like the channel if you really want to support us. Support us on Patreon. Links in the description below. Thanks, and see you in the next video.